Hey, I'm very happy to report now some happy financial news. Yesterday was ugly. It was very painful, wasn't it? Just to watch it plummet like that.
It was unbelievable. The Dow took a huge plunge yesterday, and it's bouncing a little this morning. But, you know, given the fact that I think we dropped, 350 points yesterday,
goodness.
We're up about 57 right now. I peeked at the NASDAQ. The NASDAQ was actually down just a little as of a moment ago.
Well, we always look into what's going on when something like that happens, and all this happened after Chairman Ben Bernanke said the Federal Reserve could ease off its stimulus program later this year.
And we heard a really interesting soundbite in a story that we brought you earlier this morning where it was kind of an interesting game where what people are saying is, well, Chairman Bernanke wants to ease up this quantitative easing because he thinks the economy is doing well, and investors are saying, well, yeah, it's doing well because you're doing the easing. If you stop the easing, it's not going to be doing well.
Right.
So that's why there was a sell-off yesterday, and of course we will keep in touch with all of our money guys to let you know what they have to say.
It does make a big difference. In fact, investment expert Lance Roberts took time out from his radio duties this morning on KSEV to talk to us about, that volatile market.
First of all, there's a couple of things that are happening in the last couple of days. The Federal Reserve had their meeting for June, and they talked about the fact that they're going to continue to buy bonds through the middle of next year. And they're still looking at two things. They're looking at unemployment, and unemployment needs to get down to 6.5%. And they're also looking at inflation at 2%. Now, these are targets. These are not specific goals. So it's not like when we get to this number, then everything comes to a stop. But the Fed's running into two big problems. The first problem is that inflation is going down. We are experiencing deflation in this country right now, and we're seeing this from impacts from all over the world, from Europe, from China, even to Japan. And that's starting to weigh on the ability for the economy to function. Deflation degrades economic growth, so we want to really pay attention to that. The second thing is that unemployment is going up, it's not going down. And we're creating jobs, but we're only creating jobs in the manner of keeping up with population growth. So we're not creating full-time jobs, we're not creating the type of jobs that create economic prosperity, we're just creating jobs that simply kind of maintain the status quo at this point, and it's not creating income growth. And this is why you're seeing still we have the lowest level of the labor participation rate, the number of people actually participating in the labor pool, since 1979. So we're obviously, even though we're creating jobs, it's not lending itself to that. So what the markets are picking up on now is that, well, maybe QE isn't working exactly the way we thought it was. This bond buying program isn't actually facilitating its economic goals, and the Fed's going to have to pull that off even without economic growth to support it.
A slowdown in Chinese manufacturing just added momentum to the decline from yesterday. And really, you know what? Investors had nowhere to go. Bonds were down, and gold got pummeled yesterday.